Welcome to today's class. In today's class, I'm going to be doing a full breakdown of Euro USD. Okay, I'm going to be showing you how easy it is to analyze using our simple price action methodology. Okay, so I'm going to show you how to follow an organized stepwise process that is going to help you see the market from the bigger time frames and go on to the smaller time frames like the 1 hour or the 30 minutes to pick a real-time trading opportunity. Okay, so let's go ahead and do a full breakdown of the Euro USD. As usual, the first thing I do when I come to the chart is what? Is to analyze the real-time point where prices is at. That is the first thing. Analyze where price is at. Okay, then the next thing is what? Draw out the structures that took prices to that point to help us interpret the message of what took prices to that point. Okay, so what is this structure? It's a structure of push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push, and price is currently at a particular point right here. Without any iota of doubt, one thing we can see on the monthly time frame is that the monthly time frame is bearish. Okay, this is one thing we can see for a fact, that the monthly time frame is bearish. Okay, so what does this mean? This means that what? There's a probability that if prices hit any reversal area, prices will continue on consecutive bearish structures of lower highs and lower lows, since we've clearly seen that price is bearish. Okay, so what are we going to do? What we are going to do next is to what? Is to try to bring our Fibonacci and to see if price is currently trading at any key reversal area. So we'll bring our Fibonacci from the high to the low. Okay, and we know that what? 61.8 is a key reversal area. And one thing we can see is that what? Prices has already gotten to 61.8. In fact, on the monthly, we can see that prices has been rejecting 61.8. Okay, but the most important information is that what? Prices has already gotten to 61.8, letting me know that there's a probability that 61.8 will act as a reversal area and then go on to what? To break the bullish structure that brought prices to 61.8. If there's a break of the bullish structure that brought prices to 61.8, best believe we are selling to 100.0 of the broken fractal. And eventually prices will keep moving on wave patterns on consecutive bearish structures of lower highs and lower lows, because the monthly has shown us that what? Price is bearish. Okay, and we've clearly seen prices hit a key reversal area like the 61.8, and we know that 61.8 can trigger a break of the bullish structure. Okay, so one thing we are going to do next is that what? We are going to go to the weekly time frame and see if the bullish structure that took price to 61.8, if it has been violated. If it has been violated, we know that what? At the end of the day, we'll be coming to the 100.0 of the broken fractal. That is at this point. Okay, how will you get the 100.0? You bring your Fibonacci from the lowest point to the highest point. Okay, clearly we can see 100.0 at this point. Okay, we all know that what? If we are trading in the direction of trend, our take profit should be at the 100.0, while if we are trading a retracement, the maximum available for us to trade is the 61.8. Okay, so right now the monthly time frame has shown us that we are clearly bearish, and we allow the big boys to communicate where price is going overall. We allow the big time frames to show us the overall direction of trend. What is the big time frames? That's the monthly, weekly, and daily. And we now go to the 1 hour or the 30 minutes time frame to just pick a trade entry opportunity. And it's clear, everyone knows that what? We make profits in the trading the direction of trend, and we also make profits trading retracements. It doesn't really matter because prices moves in wave patterns. So we make money trading direction. We make money trading the direction, trading the retracement, trading the direction, trading the retracement. That's how we make money. Okay, so let's go back to the analysis. Our job now is to what? Go to the weekly time frame and look for a break of the bullish structure that took prices to the key reversal area at 61.8. A break of that bullish structure will send prices to this place which is the 100.0 of the broken fractal. Okay, so we'll go to the weekly time frame to read the structures. Okay, on the weekly time frame, we can see prices make structures of push, exhaustion, push, exhaustion, push, and a clear break of structure within the confines of these fractals has been seen. This means that what? The monthly is bearish, the weekly is also bearish, because we've seen a clear break of structure, allowing us to know that what? All of the bullish movements, all of these bullish movements that took prices to 61.8, which is the key reversal area, has been violated, letting us know without any iota of doubt that price is coming down to this point, which is the 100.0 of the broken fractal. Okay, so now that we know that what eventually price is coming here, but the weekly time frame is not our entry time frame. The monthly, weekly, and daily are the time frames that shows us the overall direction of trend. We only go to the 1 hour and the 30 minutes to pick a real-time trading opportunity. So even though we know that price is coming here, the weekly time frame is not our entry time frame. So I cannot enter a sell, put my stop loss at the high, and come to the low, because the weekly time frame is not my entry time frame. Okay, so instead, what am I going to do? I'm going to still analyze and go to the small time frames, the 1 hour and the 30 minutes, to look for a real-time trading and trade opportunity. Okay, but right now, what is going to happen right now? We've seen a clear break of structure, and we know the rules. Whenever there's a clear break of structure, prices always goes back for a natural 61.8 retracement. In this case, price wants to go grab more bears and head straight to take profit overall. Okay, so since we know that what, after a break of structure, prices always goes for a natural 61.8 retracement. It doesn't do that all the times, but it does that about 80% of the times. Okay, so after a break of structure, what are we going to do? We're going to bring our Fibonacci from the high to the low right here. Okay, so when the break of structure happened right here, prices went back to what? To the 61.8 for a retracement. Okay, so what is going to be my job now? My job now is to analyze the structures that took prices to 61.8 for that retracement. Okay, and a break of that bullish structure, I'm going to sell to 100.0 of the broken fractal, which is going to be right here. Okay, eventually we know that price is coming to this ground level, but we trade in bit of small fractals. Okay, we don't trade very big movements like position movements. Instead, we trade short swing movements. Okay, so my job will be what? Go and look for what? A break of the bullish structure that took prices to 61.8 and sell down to the 100.0 at this point. Okay, so we'll take this bullish movement, we'll take it to the daily time frame. Okay, on the daily time frame, what can we see? This is the structure, and this is the movement that we saw on the weekly time frame. We saw prices make what? Push, exhaustion, push, exhaustion within the confines of this fractals. Then prices went to this place, establish bigger fractal, push, exhaustion, push, and a clear break of structure has happened at this point. This means that was, without any iota of doubt, price is coming to the 100.0 of the broken fractal right here, without any iota of doubt. But of course, we know that what, when prices break structure, what does prices do? Prices, about 80% of the time, goes back for a natural 61.8 retracement. In this case, because it's a break of the bullish structure, price wants to go and grab more BS before heading to take profit at this point. Okay, so what am I going to do? I'm going to bring out my Fibonacci and see if prices has actually gotten to the 61.8, which is a key reversal area. We know that what, 61.8 can trigger a break of structure. Okay, so clearly, without any iota of doubt, the break of structure happened here, and price has already gotten to 61.8. Okay, which we know as a key reversal area. Okay, so what am I going to do next? What I'm going to do next is that what, I'm going to take all of the movements that took price to 61.8, and a break of that movement, I know that what, I'll sell to 100.0 of the broken fractal right here at the lowest point right here. Then eventually, this is where prices will get to. Okay, but right now, my job right now is to take all of these movements that took prices to the 61.8 and look for a break of that structure to sell here. This 100.0 right here to sell here. Then eventually we know price will get here. But like I said, we trade in beats, and we trade and pick trades only on the 1 hour and the 30 minutes time frame. Those are our entry time frames, while the other time frames are just to read the overall structure and direction of trend. Okay, and without any iota of doubt, the monthly, weekly, and daily have shown us that prices is bearish by what? Breaking structures. So we don't have any arguments. We know where price is going to. That price is clearly bearish. This means that what if we go to the 1 hour or the 30 minutes time frame to pick a trade entry opportunity, if we are selling in the direction of the trend. If we are buying a retracement. Okay, so let's go ahead and take this part and look for what a break of the bullish structure. Okay, so I believe this is the movement right here. This particular movement here is that bullish structure that prices did when it went for that retracement. Okay, so now let's read the structures together. We saw prices make what? Push, exhaustion, push, exhaustion, push, and a clear break of structure has happened at this point. Okay, if you are ever able to trade this opportunity, the maximum you can trade to is the 100.0 of the broken fractal right here. That is the maximum for that opportunity. Okay, so since the opportunity is done, what is next? Okay, what is next is for us to go ahead and still read the overall structures, knowing fully well that what if we are selling in the direction of trend, while if we are buying a retracement. Okay, so what we are going to do is that what this high right here, we'll take this high and we'll take this low. Let's take them to the 1 hour time frame to read the structure right now. Let's take them and read the structures. So let's go to the 1 hour time frame. Okay, so on the 1 hour time frame, what did we do? We read the structures as what? Push, exhaustion. Then price continued by making same fractal, push, exhaustion, push, exhaustion, push. And prices did what? It broke structure clearly here. So with the break of structure, we know that if we are buying a retracement. So where's the maximum available for us in a retracing market? That is what? The 61.8. 61 points is the maximum allowed for us in a retracing market. Okay, let's take the screen to the right to see prices has actually gotten to 61.8. Okay, so clearly we know that what price has gotten to 61.8, which is what? Which is the maximum allowed for us in a retracing market. So let's stretch the Fibonacci higher. So what we are going to do next is to identify this particular trade entry opportunity. Again, we can see the bearish structures and we can see the break of structure. Okay, so when the break of structure happened, we know that what we have 3 variations of entry. You can decide to enter using entry variation 1 directly at the break of structure and put your stop loss at the low here for about 61 pips and buy to what? To the take profit here at this other 61.8, at the 61.8 here for what? 108 pips. This is like a 1:1.8 risk reward. Okay, we can also decide to enter this trade using entry variation 2, which entails what? Which entails bringing the Fibonacci from the low at this low here to the high, where prices broke the structure. Okay, let's just briefly identify the structures again. Okay, this was where the break of structure happened clearly. Then when prices comes back for a 61.8 retracement, now this is entry variation 2. We allow prices to break structure, then come back for a natural 61.8 retracement. Then what? We buy at an earlier price point at 61.8. Put stop loss at the low of about 31 pips. Then buy back to that 61.8. Okay, let's bring that Fibonacci out from the high. Okay, so let's take the Fibonacci from the high to the low right here. That is for the other 61.8 now. Okay, so we are going to take the profit, our entry at this 61.8, risking about 31 pips, or let's say about 33 pips, then buy to the other 61.8 for about 140 pips. This is the same trade, but using entry variation 2 gives us what? An earlier price point. Okay, so this particular trade using entry variation 2 will give us about 1:4 plus risk reward. This means if I put $1,000 on the line, I'll be going home with about $4,000. Okay, so this is how we are able to capitalize on a trade entry opportunity using what? Entry variation 1 and entry variation 2. Sometimes we also make use of entry variation 3. Okay, so entry variation 1 gave us what? 1:1 plus risk reward. Entry variation 2 gave us a 1:4 risk reward on the same entry opportunity. Okay, so this was how we were able to capitalize on this trade, make massive profits on this trade. Next is analyzing the structures that took prices to 61.8 and look for a break of the bullish structure. Of course, we all know that for the buy trade we took, we exited at 61.8 because what? If we are buying a retracement. All of the big boys have shown us that prices is bearish. So if we are buying, the maximum allowed for us is the 61 point because it's a retracement. Okay, so right now we've exhausted our buy trade opportunity on Euro USD. So the next thing is what? Analyzing the structures that took prices to 61.8 and look for what? A break of the bullish structure. Okay, so let's go ahead and analyze the structures that took price to 61.8. Okay, price started on push exhaustion right here. Then price established big fractal here, push exhaustion. Okay, so overall there were all of these movements, you know, but prices overall made what? Push exhaustion, a bigger higher low. Then what? This is the last higher low within the confines of this fractal. Then price made a push. Okay, this means for me to see a trade entry opportunity within this bracket, what does price have to do? Prices have to break the last higher low structure right here within the confines of that fractal. We all know that when it comes to fractal trading, we can go from small to big fractals. Okay, you can see that what this and fractals are what? Are the length of the exhaustion. Prices move in push, exhaustion, push, exhaustion. Fractals are never about the push. Fractals are always about the length of the exhaustion. And if price is going from a small to big fractal, you can trade small to big fractals together, but big to small fractals must be separated. Okay, so you can see price start on small fractals, push, exhaustion. Then price establish big fractal, push, exhaustion. Then all of this movement, price eventually establish your push, exhaustion, then push. Okay, so you can see that the exhaustion here, if you measure the exhaustion right here, okay, let's do the maths together briefly. From the highest point to the lowest point right here, this is about what? 46 pips. Then the next exhaustion from the highest point to the lowest point right here, this is about what? 78 pips. Then the next exhaustion from the highest point to the lowest point right here, this is about 100 pips. So we can see how prices is progressive, going from small to big fractal. So they can be traded together. This means that what? If there's a break of this higher low, if there's a break of this higher low, if there's a break of this higher low, it affects all of the smaller fractals behind it. This means we are exiting our trade here. This is the take profits if there's a break of the higher low. Of course, we have different variations of entry, so it's not compulsory you sell pinpoint when price breaks structure. Instead, you can wait for the natural 61-point retracement to have an earlier price point, then sell down. But either ways, we are going to focus on what is currently going on. And with what is currently going on, within the confines of these fractals, we know that what? This is the last higher low right here. Okay, and what are we going to do now? We are going to take this last higher low and this high right here. We are going to take it to the 30-minute time frame to look for what? A real-time trade entry opportunity within this box. Okay, so now let's go to the 30 minutes time frame. What we are going to do is what? Is take the 30-minute structures from this low to this high, analyze the structures and look for a break of the bullish structure. Okay, so we'll take it like this. Price out of smaller fractals, push exhaustion, then price establish big fractal, push exhaustion. Now this is a separate fractal. This is because there is no exhaustion ahead of it that shares equal or more length in terms of pips of the exhaustion as it is. We all know the rules that what? Small to big fractals can be traded together, but big to small fractals must be separated. So this is a big fractal and it is separated. Okay, so now let's go to the small fractals. Price made push exhaustion, push exhaustion. So within the confines of this fractal, this is the last higher low right here. And what are we going to be waiting for the new week? We are going to be patiently waiting for what? For a break of the last higher low. When the break of the last higher low happens right here, what are we going to be doing? We are going to be selling to the 100.0 of the broken fractal right here. This is the take profits. Okay, we are not trading below here until prices what? Breaks into the bigger fractal. Right now, our trade or entry opportunity is prices breaking what? This small fractal right here. Okay, and the small fractal, the take profits ends here at the 100.0 of that fractal. If prices now breaks below here, then price has broken this bigger fractal and the trade entry opportunity will end here. Okay, but right now, our real-time trading opportunity that we'll be waiting for to start the week is push exhaustion, push exhaustion. This is the last higher low, and we'll wait for what? A break of the last higher low. Now, when the break of the last higher low comes, we can decide to enter this trade using what? Any of our entry variation. That is what? A break of structure has happened, sell immediately. Okay, we take profit here and stop loss at the high. Entry variation 1. Okay, or you can what? Wait and see if price will give you an earlier price point by going back to 61.8. Okay, that this will bring our Fibonacci from the high to the lowest point that prices rejected, okay, and allow prices to get to 61.8 and sell pinpoint at 61.8. Like put a sell limit if possible at 61.8, put a stop loss at high, and sell down to the 100.0 right here using what? Entry variation 2. Or you can use entry variation 3, that is what? First of all, of course, there must be a break of structure. Okay, and entry variation 3 entails that what? The structure within smaller fractals that took prices to 61.8. Okay, the smaller fractal that took price to 61.8, wait for what? A break of that smaller fractal, sell, put your stop loss at the high, and sell to what? To the ground level here, sometimes for very massive risk reward. So these are our 3 entry variations, and you can be able to capitalize on this trade using either of the entry variations. So this is how we're able to analyze the most traded currency pair in the world, that's Euro USD. This is how we're able to analyze it and make massive profits of using what? A simple price action organized system. I have a very great news for everyone. Due to popular demand, I have decided to launch my bootcamp 2.0, which is going to start on the 10th of May to the 12th of May 2024. Okay, so my aim is during this bootcamp, I'm going to be holding you by the hand through very, very important areas. Bootcamp 1.0 was very successful with over 90% success rate. Bootcamp 2.0, I assure you, is going to do even better. Okay, because I've outlined a lot of the very important areas that a lot of traders don't understand, or these are areas that are still holding a lot of traders down. Okay, so it cuts across different aspects of price action, very, very key aspects of price action. Bootcamp 2.0 is going to be more detailed, okay, because from the feedback with Bootcamp 1.0, I've been able to add so much positive things into Bootcamp 2.0 that are going to help you scale even faster and become even much more profitable in a shorter time. So it's going to cut across multiple aspects of multi-time frame analysis, teaching you various parts of it, trend following, the golden time frame for perfect trade execution, so many important parts of it. The ultimate price action trading system. I'm going to be explaining my trading system in bits, taking it in the minimum term, taking it very simple and making it very comprehensive for everyone. I'm also going to be talking about psychology, because psychology holds traders down, and I'm going to be breaking several important parts of psychology for you all that are going to help you scale into profitability. I did it in Bootcamp 1.0, Bootcamp 2.0. I'm going to do it even bigger. So link in the description below, and looking forward to see you in the bootcamp.